All right. Hello. Hello. Good morning. It is March 14th, 2023. It is Pi Day internationally across the world, 3.14. I think the record for the person who was able to name the most digits is like 186,000 digits because pi goes on infinitely. So that's kind of crazy that that's the record. But it is Pi Day. I've always remembered Pi Day because my mom has been a math teacher. She's not a teacher anymore, but for like about 15 years, she was a math teacher. And so Pi Day is ingrained in my head. And we've got CPI. ER was right. What's up, Philip? What's up, Foolish Hair? Seko, Reza, Geis. Is that baby Amit in the thumbnail? That's just Amit with a little bit of a haircut. Ty Gorton, thank you for being here. Pete, thank you for being here and being last night on the podcast. You Real, R. Lee, John Hall, a blessed child, especially in the hair department. I appreciate you guys. All right. We've got a lot to talk about. Sean Clark, Ray, Vincent, Dex, Sasky Rose, R. Lee. Thank you, Chicken Genius. Well, he bought about $300,000 worth of Palantir. For those that didn't see, he posted on Twitter. Probably helped out. Before we start the show today, I just want to give a shout out to everybody who is here early. And if you're here early, you probably were watching the pitch or saw the pitch. For those that didn't see it, I tweeted at Sasky Rose. It's on my Twitter. It's like 2 tweets down, minute 34. The link is up there. Or if you just type in Founder University Cohort 4 into YouTube, it'll pop up. It'll be the first video. The pitch was to Jason Calacanis. I think it was okay. It definitely was a little bit too fast for him, and that was a miscalculation on my part. And it kind of sucks because as a more professional communicator, I should have realized that I guess I needed to go slower. Didn't anticipate that. Hard to kill myself over, to beat myself up. Because it's like, I thought I got a lot of information packed in there. It was pretty clear from, where I heard it. And there were some texts I got from some very important mentors in my life, people that have even invested in Jason's companies before, that told me that it was great. And regardless, to Jason, it wasn't slow enough. So, it had to be slower. That's it. Just had to be slower. And that's it. So as much as I liked it, as much as I thought it was good, as much as I got a lot of positive feedback, it needed to adapt. And, as someone who tries to adapt to the audience, that was a miscalculation on my part. I just didn't expect that he needed it to be slower. And, it is what it is. I can't do anything about it. But nonetheless, we'll see what they say. Overall, I think it went okay. One of the judges still voted for us in our top 2 because they thought we were going after the biggest problem, which I agree. And at least in my cohort of the groups I was in, there was a dating app. There was a MyFitnessPal competitor. There was some climate change thing that was whatever. And then there was solving discovery for content. But we will ultimately see what happens. Ultimately should have gone slower and keep going for there. First of all, I just want to thank you guys so much. I didn't expect that many people to be in the chat the whole time that were just like, Amit, we're here for Amit. But like, the support was so unbelievable. I can't even it makes me want to cry because it's just like, it's insane the amount of people that actually care. It's very hard to get people to care about anything. And the fact that you guys showed up and cared, it means a lot. So I wish I could have done better for you guys. I wish I could have gone a little bit slower and really get the right feedback from Jason. But it is what it is. Can't do anything now. Got to keep moving forward and keep going. So thank you all for being there. It means a lot. Tell Jason to listen in 0.5 speed. You were probably just a bit nervous and excited and a bit nervous. Now, the one thing I'll say is I really wasn't nervous for this because I'd done the pitch like 30 times before. It wasn't nervous. It was a miscalculation of speed. Like, I can genuinely say I wasn't nervous. If I knew I had to go slower, I would have just done it slower. Like, when I started the pitch, I wasn't nervous. I was ready to kill it. And I thought I kind of killed it. But it had to go slower. And so that's it. They even accused you for bots in the comments. Yeah, everyone thought I had bots in the comments. I was like, no, these are people that kind of support the journey, which is awesome. So look, if they want to walk away from this deal, especially from, I already pitched them privately. I talked to them. They know me really well. I know their entire team. Now it's just a question of if they're interested in making a deal. And either they reach out or they walk away from it. And if they walk away from it, hopefully they walk away from a company that they're going to be very sad to walk away from. If not, then we just keep going. That's pretty much it. All right. Let's look at my picture. Am I a bot? Come on, man. All right, let's get into inflation. We got a lot to talk about. CPI came in rising. CPI came in lower. Obviously, it's up 6% year over year, but it came in a lot lower from what we expected. Inflation gauges increased 0.4% in February as expected and up 6% from a year ago. It is down from last month, so 6.4% to 6%, which is amazing. I mean, I was a little scared last night. Me and Chris were talking about it on our new podcast. We started every night, 9 to 10 p.m. We're going to just be talking about the market. Both of us thought it might come in at 6.1, 6.2. So I was really happy that it came in at 6%. Excluding volatile food and energy prices, core CPI increased 0.5% in February and 5.5% on a 12-month basis. The monthly reading was slightly ahead of the 0.4 estimate, but annual level was in line. As you can see right here, we got down to 6%. All items in June, 9%. This was when Kramer said it peaked, which, he gets some things wrong, but this was pretty much correct. Inflation obviously peaked in June at 9%. It likely wasn't getting higher than that. As you can see here, we had 1.7% in 2020, then 2021. This is when the Fed says it's transitory. Right here. Then it's up. By this time, we kind of knew it wasn't transitory in 2022. And we have been having a nice steady decline down to 6%. The market is up as a result of this. Not raging hot, but the market is up as a result of this. Gabe was expecting 6.4%. Yeah, Gabe thought it would just be 6.4. But we are down to 6%, which is not bad. Now, the market is rallying a little bit, not a lot from this, mostly in line with expectations. One stock that is rallying, which I was thinking of buying yesterday, but I was too scared to buy it. And I don't know if the rest of you were too scared to buy it as well. First Republic Bank, ticker symbol FRC. It was up 50% in the pre-market today as it was rebounding from Monday's sell-off. The stock traded 52% higher in the pre-market and was one of the best performing names in the SPDR S&P Regional Banking ETF, which was up 8%. Other banks like PacWest, KeyCorp, and Zions Bank all up about 20 to 40%, which is really interesting. A lot of people did not expect banking stocks to do well. I saw some people on Twitter buying banking stocks at, like 16, 17 bucks, making 50% in 30 minutes on their money. And it was interesting to me. I was kind of distracted yesterday on the biggest pitch of my life that I got roasted on. So not only did I not get a chance to buy into some of these banks, I also got a chance to get roasted by an idol. So yesterday was just a phenomenal day, nothing bad about it. But like these banks are up, right? And so it makes sense if the banks aren't going under, one would imagine that the banks are, someone's going to be buying these banks. If they're not having a bank run, then these are distressed assets that are artificially distressed and only distressed based on the news of Silicon Valley Bank and Signature Bank of New York being cut. But if those banks aren't being cut, then it's not bad. Now, the thing is, no one saw Signature Bank of New York getting cut. So it's hard to just imagine like, oh, I'm going to buy FRC and everything's okay. What if it got cut yesterday? What if something happened where you didn't see something coming and boom, you got blindsided and then it went under? And I think that's also a little bit of the scary part of what's going on. It was a valid criticism. I don't think it was roast. I agree. It was the reason why it felt like a roast is because like it was just like a ton of he's like a ton of negative stuff and then there was like one positive thing. But I agree with Jason. It was valid. It needed to be slower, and it is what it is. At the end of the day, can't do anything about it. Just got to get better for next time. Ramu, I saw your email this morning, so you emailed it to the right email. I just didn't open the email yet, so I will get back to your email today, probably right after the market open. Ron Barron bought Charles Schwab shares during Monday's double-digit sell-off. Ron Barron, absolute legend, obviously saw some some opportunity in Charles Schwab as it decreased. 79-year-old investor said he modestly increased his position in the financial name, seeing Monday's pullback as a buying opportunity. He didn't disclose how much he purchased. Barron Capital owned 7.8 million shares of the stock. It was up 13% in pre-market. Charles Schwab is one of those financial institutions that like no one would expect to fail. Right. And the idea that it's falling double digits in one day, that it's like Walmart falling 10% a day, like Walmart, Target, they're not supposed to fall that much unless they absolutely crap the bed because, they're blue chip staple stocks. So at the end of the day, there was a big buying opportunity yesterday for banks and for some of these stocks that really, really fell off a cliff. And Ron Barron took advantage of that. Put in the chat if you took advantage of buying any stocks. I know there's some people on Twitter that I follow that took advantage of buying things like FRC and some of these distressed assets. But let me know if you took advantage of any of that. SoFi also was down. Let me open up Webull. SoFi was down to 5.10 yesterday at the minimum. SoFi is up about 5.73. One of the more bullish news pieces of information I saw on SoFi is that they are spending $1,000 on customer referrals to get customers into their like medical doctor banking program. And I'm probably butchering like the name of the program, but $1,000 for an affiliate to get them to get like to get a doctor to bank with you, to me means that they can afford to spend $1,000. And as long as this is not something like where they're spending way too much money that they can't afford to make up on the back end, things might be going well. I mean, the deposits might be going a little bit better than expected this quarter if they're spending that much just to get doctors. I mean, like $1,000 cost per acquisition is crazy, but you can only just, and Noto's not a dumbass, right? Like he's not going to spend $1,000 to get someone that they're only making $50 off of in the back end. So it's very interesting. Tesla, I bought 2 pieces of Tesla yesterday at 168. I like how I said that. I bought 2 pieces of Tesla. I like how I said that. Now it's at 177, up 1.67%. And as I say that, it is 9:30 a.m., March 14th, International Pi Day, almost halfway through the month. And the stock market today, thank you all 260 people for being here. It means the world to me, is now open. My dad is actually home today. He's downstairs. He's doing virtual jury duty. Can you believe that? Virtual jury duty. So I hope his mic wasn't on because all the jurors probably heard me ring that bell. All right, here we go. Roku up 3.59%. Roku getting $478 million from the FDIC. That does not have to go under now that we backstop depositors. Palantir up 8.02%. There is also a new Palantir deal. I will get into that just in a little bit. Fisker 6.4%. Coinbase 64 up 10%. Not bad on Coinbase. DNA, Ginkgo Bioworks. Should have bought some at $1.19. It's at $1.40. My average is $1.42. Probably should have realized that $1.19 it was good. But then again, at $1.19, you're like, well, can it go under $1? And like that's the hard part. But I have been DCAing into this one. I look at $1.40, I like it. At $1.20, I like it. I think, can it get back to $3 within a year? Yes. And is that an easy double? Yes, in my opinion. Now, granted, do not buy that stock because it is risky unless you understand the long-term potential of it. I believe in Kathy's research in it. But I wouldn't be buying it at $3-4 at $1.20, $1.30. It actually looks like a decent deal to me. Please do the research on it because it's one of those stocks that's a risky play in the biotech space. Nvidia 235. So Nvidia rebounding from 224 yesterday. Rocket Lab is up. Nvidia being up, back to post earnings level means that the market actually is doing a nice little rebound. SoFi up 4.5%. Google 93. Triple QQ up 4% as well at $22 right now. AMD 84. Microsoft 257 up from 245 from last week. Spotify 124 up very nicely. Roblox 42, Netflix 294, Bitcoin. If you've got Bitcoin and you've got Bitcoin at 21,000, shout out to you. Obviously, it's not a hedge against inflation because as inflation is going down, Bitcoin moves up because, of course, Bitcoin likes inflation. 26,000. This is a little bit of an all-time high, I believe. I don't think we've crossed 25,000 in a very long time. Up 7%. It was down almost 10% over the weekend. Enphase, of course, 220. It's going to rally hard when the market rallies. Enphase is one of those stocks that rallies. Robinhood, 945, up 5% as well. Let's go back to Tesla. Where is Tesla at? Did we cross 180? Yep, we're at 180 right there on Tesla. I bought FRC at 29 and stop loss at 26. Got kicked out of stop loss. I can never see that price reach at 26. Doubt trading. Man. That's tough, Ramu. Well, at least you got it at 29. It's not the worst thing in the world. David Strauss about Rocket Lab at around 395. Not bad. Also bought JP Morgan. Sold more puts on SoFi yesterday. Not a lot of puts, just 20. I bought DNA and SPY calls yesterday. Yeah, so Glitch turned from doing the short dance to doing the long dance now. So we're not there. Didn't think J-Cal liked the caps jokes. Did you come up with it? I don't know if he liked. So there was this one moment in the presentation where I said no platform is doing this for audio. And then I said I put no platform in caps because I heard caps lock is getting the job done these days. I thought that was funny. I thought that would get a chuckle out of him, but I didn't see his face when I was presenting. So I have no idea. Who knows, man? Who knows? We'll see if they come back with a deal. If they don't, look, you move on. We don't really need their money, right? This was only to get Jason as an investor. It was not to get his 25 or 50K. Like, honestly, because of you guys and the funding we got from other angels over the past year, but we don't need that. That money's not going to make a material difference. His name might have. And so we'll see. We'll see if he comes in. If not, we move on. There's a lot of people that rejected Airbnb. There's a lot of people that rejected Yelp. You get rejected. You move on and you keep going forward. Now, obviously, in our cohort, I do think we were one of the better companies, but it is what it is. We got to see what happens. Amazon at 92, Intel at 27, Spotify 125, Airbnb. Speaking of Airbnb, 118. Airbnb holding on to its post-earnings run. Not too bad. It's at 47 here on the RSI. All right, sorry, on the 1 minute, it's at 65 on the RSI. If we're trading it at 118 on the 5-day, it was at 47. Snapchat rallying also really well from 1060. Oh, we got some breaking news on Meta. Hold on, we got. You know what I need? I need like a breaking news thing. I need like a thing that does breaking news or something. I need a soundboard. That's what I need. I need a soundboard where I can press a button and it's like some. I need to invest in one of those. I think that would make this even cooler. Meta's at 189, rallying up 5%. And the reason Meta is rallying up 5%, I think you guys can all guess it. We've got layoffs. Meta is laying off 10,000 people. Wow. Meta is laying off 10,000 people. 10,000 people have been laid off from Meta platforms. Oh my goodness. Oh my God. Caps lock is something to grab attention. Oh my goodness. This is the soundboard is just various cowbells. Yes, exactly. Wow, look at this. Meta laid off 11,000 employees in November, 10,000 now. That's 21,000 people that have just lost their job. You know who's smiling about this right now? His name rounds with Parome Jowl. Wow, that was perfect because I literally switched the P and the J and I did that unintentionally. Jerome Powell, Parome Jowl. That's how you know I'm like inside of the finance media world. For me to just switch that subconsciously with the P and the J, that's I think that's a little impressive. That's all I'll say. It's a little impressive. All right. Zuckerberg told analysts in February that Meta plans on cutting projects that aren't performing no longer might be crucial. Also, we talked about this with Chris last night. Meta cut NFTs. Instagram and Facebook no longer support the blockchain integration with non-fungible tokens. It's a big blow to anyone in the Web3 space. You could tell this was coming because OpenSea, which is the largest trading platform for NFTs, that, by the way, raised a $300 million Series D round in April of 2021 at a $13.3 billion valuation, has had its trading levels fall 92% since 2021. Which means people aren't trading NFTs anymore. The whole point of trading NFTs is, they're speculative assets you can sell and buy on. OpenSea makes a commission on the trade. If people aren't trading, OpenSea doesn't make a commission. That company is not worth $13 billion anymore. The company's Reality Labs division that tasked with creating the metaverse lost $13 billion in 2022 on $2.6 billion of revenue. So obviously, if you're losing $13 billion and you're only making $2 billion, if you cut 10,000 employees, maybe you can make up a couple billion of revenue. I would argue 10,000 employees is probably a couple billion of revenue, a couple billion of expenses. And so shares of Meta are up 4%. Shares of Meta. You know who's smiling? You know who has their hands smiling like this right now? Is Chris Patel, who has some decent Meta locks or some Meta calls. Google just announced AI for email and documents. Let's look at that on Twitter. Google email. I mean, this makes sense. AI and email is really important. Yeah, here we go. Okay, let's look at this. Google just announced. Let's look at this. We got a little video that's going to show us exactly what this looks like. Here we go. Okay, so Google has just announced a new ChatGPT-like AI feature for Gmail and Google Docs. It will automatically generate you drafts of text for emails and docs. Google's announcement comes days before Microsoft's expected to announce similar features. So here's the GIF. Wow. And it's integrated right into Google Docs. That makes sense. It's super simple into Google Docs. Yeah. Yeah, look, makes a lot of sense. I mean, if Microsoft was expected to announce this, it makes sense that Google is announcing this right now. GPT-4, which is an improvement from GPT 3.5, is also going to be coming out, and it's going to be supporting video learning language models, which is going to be very interesting because, I mean, if you can create AI-powered video, I've already seen some of the AI-powered photos from GPT-4, and it's not bad at all. So the videos might be just as incredible. And so we're going to see kind of what that turns like. But, look, it makes sense for Google. I don't think anyone uses, yes, Microsoft has Microsoft Word, but Google Docs is just so easy to use. It's so simple to use. I would argue it's easier than Microsoft Word because it's just, online and you can immediately go to it. So them integrating a ChatGPT like feature. And I've already seen Google's AI in my email. I mean, like when I'm typing something and I write like, thank you for, and then it'll fill in the rest of it. And it's pretty accurate. It hasn't obviously been as advanced as writing the whole email, but it does help in assisting in writing emails. So it's not a bad thing. Let's go back into the market as well. Have you solved the Rubik's Cube before? Oh, did you guys see that when I pulled it up? I don't know. I've not solved it yet. It is like my startup. It is still an unsolved mystery for me. And I'm on the journey of figuring it out. Honestly, I haven't even put any time to try to figure it out. I was going to watch some YouTube videos and try to just learn the basics of it, but I just haven't had any time for it. Meta at 191, up 5.6%. Like the whole market's up very nice. I mean, look at that green. Where's the red? You got That's a different. I think that's a warrant on Microsoft. And Neo's red. Neo's just been destroyed. Even Tattooed Chef is green. Arc is green. Uber. What is Uber at a $66 billion market cap? Uber is green. Uber and Lyft, I believe, got a favorable ruling in California, if I'm not correct. I think they got a favorable ruling. Uber, Lyft, California. Is it good? Uber, Lyft shares rise up. Yeah, California court victory lets them classify drivers as contractors. So this was Proposition 2020. This was Proposition 22 on Monday. An appeals court overturned that ruling, allowing Prop 22 to stand. Voters approved Prop 22 in November 2020. So, yeah, if they're not employees, then Uber doesn't have to worry about healthcare or benefits or any of that stuff. If they're contractors, which is arguably the way the free market should operate, them being contractors, them being able to pick and choose their own schedules, Uber gets the ability to kind of do whatever they want with those employees or with those contractors. When I was a kid, I would switch the stickers on a Rubik's Cube. Yeah, I want to actually try to solve it. All right, what else do we have here? QQQ up 295. This one was at 420 is its max. If you look at it right here, 405 is the max on the QQQ. This was back in November 2021. It's fallen to the lows of around 267 back on October 31st. So it looks like October 13th was the bottom. October, or that 2-week period we had in October, that's when Meta was at 88. That's when Google was below 90. That was the bottom so far, and we aren't seeing a new bottom yet. Apple at 152 doing nicely. Tesla 180 holding up strongly. Roku again pulling out strongly. Zoom pulling out strongly. Hims up 1.8%. Teladoc up 3%. And again, Meta up 5%. Overall, not bad at all. I like the brick paper wall behind you. It is real bricks. For any of the 307 people that are here, for any of the new people, these are real bricks. So just saying. Now, what's also very interesting to me is I saw a debate last night between Vivek Ramaswamy, who's running for the presidential candidacy, and David Sachs, who's a venture capitalist, do a debate on if the Silicon Valley Bank, let's call it salvation. That's a very religious term, but salvation. Was it a bailout or not? And I think there were some interesting arguments from Vivek's side, who is kind of against what we did ultimately. And the argument actually made a decent amount of sense. The startups inside of Silicon Valley Bank were primarily tech startups and primarily based for founders who, have equity positions in these tech startups. And the FDIC bailing out those depositors basically means that venture capitalists and equity holders didn't have to put in money to dilute their shares, which is why he's appealing to the fact that it wasn't as American. It wasn't as broad facing for everyone, because ultimately we're bailing out a bunch of tech startups. The counter argument from David Sachs, who is biased because he's a venture capitalist, but I think also made a lot of sense. And it was a really good debate. It was on the Megyn Kelly show. I actually listened to all 30 minutes of it. It was very good. David Sachs was like, this is about setting a precedent, because even though they're tech startups, and yes, they're like the elite of America, even though a lot of these are small businesses and, they raised a couple $1 million, they're not really like, these multi-billion-dollar tech companies. If the precedent was set that the FDIC was not going to bail depositors out, there would be a run on more banks. We already saw a run on a couple of banks. We saw bank stocks fall dramatically. That would be happening nationwide, because why wouldn't you take your money off of a small regional bank and put it into a big four, JP Morgan, Wells Fargo, Bank of America, etc.? So I think the argument for what the FDIC did ultimately makes sense, because the precedent that it would set if they didn't step in and Roku loses $500 million, if you're a company that has $500 million in one bank, that's a regional bank that's giving you a better loan rate, why wouldn't you take it out and put it in Bank of America just to make sure that you never lose that money and you sacrifice a little bit of the interest rate? So ultimately, I think it makes sense that this happened, but it was a great debate to kind of see them react in the way that it did. All right, let's take a look at this. What to expect from the Federal Reserve in next week's announcement. They now have to decide 50 or 25. This is what we have to see, and we'll see what happens. For everyone saying it's not real bricks, they are. Even if they're misaligned properly, that doesn't deny the fact that they're real.
Steve Leisman.
It just denies your imagination. All right, let's get into it.
Joins us right now with more on this. And Steve, it wouldn't surprise me for somebody to say, yeah, nothing is expected to happen at this next Fed meeting, but the idea of actually seeing a cut right now, that would be a shocker.
Yeah, I would not be in the cut camp, Becky. And you really set it up well, because, in an hour, we could have a potential clash where a market that has sharply bid down interest rates and the outlook for the Fed because of what's happening in the banking world, it meets the reasons why rates were high to begin with, high inflation. Take a look at the outlook here. It is not a modest inflation report expected. 0.4 down on the month-on-month rate, but still high on the headline. And then the year-over-year 6%, again down, but still, what do you want to call it? Triple the target of the Fed. Core CPI 0.4%, not much progress there, and just a 10th down expected on the year-over-year rate. Numbers like that, well, you look at that and you say the Fed should be continuing to hike, but they will not, of course, incorporate the latest potential economic fallout from the banking meltdown we have, including this, whether what's happening in the banking business is the leading edge of the lagged effects of prior rate hikes. So take a look at where the market is now. The pricing for the year-end funds rate, I'm speechless about this plunge here, down to 423, or 40 basis points of cuts built in from the current level over the rest of the year, not in the March meeting. And that's down from 550 as recently as Thursday. What about the March meeting? Take a look here. There's still a quarter point expected. Nomura looks for cuts. Some see the Fed not changing rates, but there's still a 73% probability of a quarter point hike, 27% chance of no change. Ian Shepherdson of Pantheon says, we see almost no extra inflation risk from skipping a hike next week. They could always catch up in May. So in an hour, expectations that chaos in the banking business create tighter financial conditions in the economy that ultimately bring down inflation. They're going to meet stubbornly high inflation numbers from the past and the uncertainty, Becky, about how the Fed.
How will the Fed respond? That is the question. Dan, you started the brick conversation. Every time someone's got to start it. And no chance of a no hike. I would agree with you, Bads. I would say there is no chance of a no hike. There's going to be some type of hike. The question is which type of hike. Breaking February CPI shows inflation at 6% in line with expectations. Slowest annual increase in September 2021, which again, that's not a bad thing. Slowest annual increase since September 2021, which is, I mean, look at this chart right here from September 2020. Look to June. This at the top is June 2022. That's in less than a year. No, that's like a year and a half, right? That's about a year and a half because September 2022 would be 2 years. So that's about 1.5 years. That's a lot for the United States, for the world's greatest democracy, biggest economy in the world. To have that, I mean, that's like Turkey type shit for us, right? We're not supposed to have inflation like that. Granted, we printed $7 trillion of liquidity. Quantitative easing was insane. Stimulus checks. All of this was the bubble. And this is when tech stocks were also going crazy. And now it's coming back down, back to normal. And so I think the opportunity for the stock market is, are you accumulating in this phase? Well, because when this 6 goes to 2, Tesla will not be at $180. Like Palantir is not going to be at $7. Like the S&P is probably not going to be at 390. That's just not going to happen. And so the question becomes, is this, and also the question is, how long does it take to get there? 6% inflation is nothing to be happy about. Obviously, in the United States, we held ourselves to a higher standard. But do we have 18 months till we get to 2%, which is the Fed's target, which is an arbitrary number, but it's the Fed's target? Do we have 5 months till we get there? Do we have, 24 months? And I think that's going to dictate a lot of the accumulation phase that we need to have. Dex, these cinnamon rolls are crazy good right now. I'm happy you're enjoying cinnamon rolls. Let's go back into the markets. Let's see what we have here. Again, we're pretty much green. And look at Palantir up 3.8%. Oh, let's get into the new Palantir deal as well. So Palantir at 3.8%. Let me pull that up. Give me 1 second. Let me just pull that up from here. So this was on Twitter. Palantir FCG. They partnered with an organization. That's Twitter search, of course, is going to suck. Let me go to Google search. I've been using a website called po.com recently. It's from Quora, and it's like a ChatGPT competitor, but it's actually really quick and it doesn't always have these issues. It's poe.com. Palantir new deal. Where is it? See, I saw it on Twitter this morning. I saved the link, but not on my computer. Let me just type in Palantir and it'll probably come up. Here we go. This was a deal that is with European banking organizations, or I believe European Regulatory Risk Organization. And Yeah, here we go. All right, let me pull it up right here. It's partnering with FCG. I'll probably do a little video on it a little bit later to discuss it as well. So here is the link. FCG partners with Palantir Technologies to develop governance, risk, and compliance solutions for European clients. So FCG, a leading European governance, risk, and compliance advisory firm, basically a consulting firm, is pleased to announce a new partnership with Palantir. Together, they will develop GRC services for clients across a wide range of sectors and demographies. So Christian Benter, the CEO, says, we are pleased to partner with Palantir. Our clients face increasingly complex GRC and business challenges, and we believe that our new joint solutions combining Palantir's advanced technology with GRC's expertise will bring significant value. Nordic lead at Palantir says, we look forward to working with FCG to make Nordic financial sector smarter, more secure, and sustainable. Combining their unique industry expertise with our on-the-ground breaking technology platform will enable financial institutions to deliver innovative services. It's interesting that they, this press release, that's all it is. It's a very small press release, comes out the day after a major financial institution collapses. I don't think there's anything, that correlated with it. But the fact that they're enabling financial institutions to just be more efficient and effective, obviously understand risk mitigation, which is one of the things that FCG focuses on. Again, if Silicon Valley Bank had something like Palantir implemented, they would have seen that as interest rates are going up, it's probably not a good thing to have billions of dollars of mortgage-backed securities that, by the way, are unvaluable when interest rates on mortgages are going up. Like, it does not take Elon Musk and a rocket scientist to figure that out. And maybe corporate mismanagement is the reason, but also if you had some software that could just like alert a little bit of a red flag. Otherwise, it's just gross like due diligence and negligence from the people running Silicon Valley Bank to not realize that was happening. So, I mean, maybe Palantir could have solved it. Who knows? But we will see. It's like 9% in the UK. Yeah. I mean, the UK has its own set of inflation. But if America can get inflation under control, I think a lot of companies will be able to countries will get inflation under control. Some Russian news is that Vladimir Zelensky is meeting Xi Jinping, which is very interesting. The New York Times ran an article about this yesterday. Expectations are growing for China's Xi Jinping to visit Russia and also visit Ukraine. So Xi Jinping will be visiting Moscow and meet his Russian counterpart, Vladimir Putin. There are reports Xi could also hold talks with Ukrainian President Volodymyr Zelensky. Now, why is this interesting? Well, in general, I know we're not old geopolitical experts and stuff like that, but it's kind of crazy to see Putin and Xi Jinping buddy up together and talk. That's obviously not good for the United States. Whatever they come up with and whatever ideas they have, it's not, I think, a conspiracy theory to imagine those two forces teaming together and eventually overthrowing the United States, eventually trying to topple the United States. Would it happen overnight? Obviously not. Would it happen in my lifetime? I don't know. But the idea that they're not thinking about that is, they're definitely thinking about that. They do not, regardless of what you think about China and Russia, they do not want Western freedoms to be the overlying philosophy that governs the entire planet. And so we're going to see how that turns out. Can the Feds raise rates by less than 25 basis points hike, or does it have to be done in that increment? That's actually a good question. I don't know the answer to that. I think theoretically they could, but historically it's always been 25 basis points increments. So anyone in the chat can correct us. But yeah, I think it would have to be 25 basis points increments, and we're going to see kind of where it goes from there. All right. Former Bridgewater CEO, let's hear his on what's going on with SVB and the implications for the entire banking industry going forward.
From regulators, market volatility, what's going on in this country? We are joined by Dave McCormick. He's the former CEO of Bridgewater, former Republican Senate candidate for Pennsylvania, now the author of a new book. It is out today. It is titled Superpower in Peril, a battle plan to renew America. And we couldn't be more thrilled to have you, especially given what's happening in this country and in the financial world today, because you not just lived through it, but were part of a central actor in 2008 and that financial crisis as somebody working for Hank Paulson at the time in the Treasury. So I'm so curious, as just before we even get into it, as you've been watching this whole thing play out, what you're thinking.
Well, it's a little deja vu all over again, but you think about there's some similarities and there's some profound differences. I think the similarities are that the financial crisis of 2008 was a byproduct of an extended period, in part, of low interest rates. And what we have now is a crisis that's the byproduct of a decade of excess spending and excessively low interest rates.
Right.
And that's creating an asset liability mismatch. And I think Silicon Valley Bank had lots of problems about its management, poor oversight by the San Francisco Fed. But ultimately, it's an indicator of a much broader set of problems because we've got a real challenge with inflation. The Fed's going to have to wrestle that to the ground, and it's going to create lots of challenges for our economy.
Okay, I want to get to the broader challenges in a second, but I'm curious as somebody who tactically has seen sort of the different things that the government did back in 2008, and you've now seen what.
I wonder if me and Andrew Ross Sorkin have the same ring. I think his probably cost like $1,000. Mine is from Amazon. It costs like $5, but I don't know. I think we might have the same ring.
Today's government is doing. Do you think that is this a firewall? Meaning the sort of implied guarantee for deposits of sorts. It's not a full guarantee, but implied. The Fed backstop. What's actually happened with SVB? Do you say, okay, the dominoes have stopped, or are there more dominoes?
Well, two. I mean, you have more expertise on 2008 big picture than I do in many ways because you wrote the book on it. But I've learned, and I think act with caution and humility about what lies ahead. I'm not entirely sure. I look at the response to Silicon Valley Bank, and I wish they would have been able to sell it over the weekend. I think that would have made things much cleaner. I like the fact that management was replaced the way it was. I like the fact that the creditors are going to be challenged. I'm worried about the fact that the uninsured depositors were protected that way, and I'm worried for two reasons. One, there's the basic principle of you have the guy who is doing the landscaping outside the building who's now not going to get paid on his outstanding, and you've got the venture capitalist who's going to get paid 100% money good on the deposits. Something seems off with that. Then the second thing, there's $18 trillion of bank deposits. 8 trillion or so are uninsured. So is this a precedent? Is this actually a practical way to do it? So I've got real concerns
about it. It
about
is a precedent, though, right?
Yeah,
it's one that it's hard to unroll back.
I think so. And listen,
do it at that point without causing a serious
you guys know this. Well, banking is about confidence, and I understand the need to create confidence, but we're also creating precedents that are deeply troubling. And you know well that the second and third order consequences of policy isn't always evident.
This was Vivek Ramaswamy's point as well. His argument was like the precedent we're setting, even though, confidence is important, might not be the best thing when it comes to bailing out some of these banks. We got an update from Zucks. I just shared this update on our year of efficiency with Meta employees. So here's his logic. Meta is building the future of human connection. Today, I want to share some updates on our year of efficiency. Our efficiency work has several parallel work streams to improve organizational efficiency, dramatically increase developer productivity and tooling, optimize distributed work, and garbage collect unnecessary processes and more. Garbage collect unnecessary processes. That means they're getting rid of this stuff. Here's the timeline you should expect. Over the next couple of months, organization leaders will announce restructuring plans focused on flattening our organizations, canceling lower priority projects, and reducing our hiring rates. With less hiring, I've made the difficult decision to further reduce the size of our recruiting team. Overall, we expect to reduce our team by 10,000 people and close 5,000 open roles that we haven't hired yet. Wow. It will mean saying goodbye to talented and passionate colleagues. This will be tough. After restructuring, we plan to lift hiring and transfer freezes in each group. Our other relevant efficiency timelines include targeting the summer to complete our analysis from hybrid work to learning. As I've talked about efficiency this year, I've said part of our work will involve removing jobs, and that will be in the service, both building a leaner, more technical company. Wow. It's pretty ruthless, man. And look, you can't blame him as a CEO. He has to make these decisions. These are tough decisions, but that's 10,000 people that are losing their jobs today. 10,000 people losing their jobs. Wow. That is interesting, man. I mean, the reason I'm saying wow is because I wonder if it even makes a dent in the unemployment rate. I wonder if these people that are losing their jobs actually have incomes that would be meaningfully affected, meaning, yes, you're not making $300,000 anymore, but if you saved up over the past couple of years, maybe you can wait a little bit, you're not like immediately on the street looking for a job. So it's going to be interesting. Those people are going to get a new job in the next 2 months. Well, yeah, it's interesting because out of these 10,000 people, I'm not sure if all of these are technical. A lot of these might just be recruiters, to be honest. And some of these might be like more about stuff that didn't matter, like extra product managers that really didn't need to like constantly, manage a product, for example. Product management. I've talked to friends who are in product management. there are some things that are incredibly necessary. There's other parts of their job where like they work 2 hours a week. Like they are managing the Slack internal communications between the engineers actually coding. Now you need someone to do that. You definitely need someone to do that. I've been product managing for my startup, and literally like you need to walk the devs through, because the developers just, they need to know what to do. They can't think of the product internally and externally, right? So they just need to know what needs to be done. So you need like a, for lack of a better word, visionary, right? Someone who can see the vision, not like Steve Jobs level, but someone who understands the product well. And you need a critical thinking mind. This is why people from Harvard and Stanford, they get these types of jobs, because they understand how to think and, critically analyze shit, even though you don't have to go to Harvard or Stanford to be able to do that. And so these people might not be as needed because, the technical people might be able to get the job done. That might be some of the restructuring that they're doing as well. And so that's also some of the people. Business analysts. Yeah, business analysts as well. These people might not be needed anymore. I mean, how many people do you need to analyze your business if you're Meta? You print money and you put up ads. Like that's your job. All right, here we go. Jerome Powell should go with 25 basis points. This is the last one we'll check out. And then I'll be gone for today. Thank you, 352 people, for being here. I think we're hitting like almost 300 on average every single day, which means a lot to me. Again, thank you all for the support on the pitch yesterday. Only thing I ask is Twitter in the description. If you're not on Twitter, please follow on Twitter. Trying to grow Twitter. And means the world to me. All right, let's check out this last video, and then we'll be out for today.
Green, Global Chief Economist at Kroll Institute. Also, John Riding is here, Chief Economic Advisor at Breen Capital on the set. Megan, you just heard the conversation that Becky was having a little bit there with Mr. Leisman. I'm curious what you think, if you're Jay Powell at this point, you need to do or not.
Yeah, so I think when we get the inflation data, it will show that the job is not done. The Fed has distinct tools for, on the one hand, monetary policy, macro policy, and on the other hand, financial stability. And so as Steve pointed out, what we saw last fall with the Bank of England is that a central bank can actually provide support to the markets in the middle of a tightening cycle. And I think that's what the Fed will continue to do. So I expect a 25 basis point hike later this month when the FOMC meets. I always expected that. I never thought a 50 basis point hike made sense. The Fed, more like any other central bank, has actually learned the lesson from the 70s, 80s that you can't engage in stop-start monetary policy, or you end up having to hike even more in the end and pushing the economy into a deeper recession. So I think the Fed will continue to tighten.
John, this is sort of the argument that we heard from Mohamed El-Erian yesterday. And he basically said, if you go the route of letting the market dictate to you what's happening, you can't do it. What would you do?
Well, Andrew, I think he's right in that. And, it's really about the strategy of monetary policy. And unfortunately, Chair Powell made a big mistake last week when he gave his testimony, because he'd laid out a very careful strategy. Last year was about how fast we're going to raise rates. Then we were transitioning to how high, where he signaled it would be a little higher than they thought in December, and then for how long. But then last week, he reopened the discussion about how fast. And the market got terribly oversold in shorting 2-year notes and other front-end instruments. And then you get the problem, as Becky says, these stupid positions, these large unrealized losses, which in the case of Silicon Valley Bank was almost 100% of the tier one capital.
Blame him for that, though, because
$15 billion.
There's sort of an interesting question as to whose responsibility is this. Part of it says the practical reality is, if Jay Powell is in the role and he sees this happening at regional banks across the country, maybe he's supposed to take on some responsibility for saying, okay, you know what, these guys can't handle this in some ways. And then the other side is the personal responsibility of running a bank and trying to manage it properly, knowing what's exactly happening in front of you. Well, I think
Andrew summarized it really clearly. That's going to be the debate with the Fed has to do next week, right? Should Jay Powell think that these banks dealt in corporate mismanagement and therefore rates should continue to go up because that was just a sort of external circumstance that was contained within that one bank because they messed up? Or does he realize that rates being up was partly the reason being so high that these banks ended up failing, and maybe he has to slow down just a little bit? I don't think we're getting a cut, but 50 was almost guaranteed last week, and then a bank collapsed and $200 billion blew up in thin air. Maybe 50 is not guaranteed anymore, and that's what we will see coming into next week. All right, that's it for me. Thank you all for being here. I appreciate it. I will see you guys tonight, 9 to 10 p.m. Me and Chris started a new podcast. We're doing a market recap. We did our first episode yesterday. We talked about the market, talk about a bunch of other things. So if you want to show up at 9 p.m., you can see it on this channel. And if not, I will see you on the market open again tomorrow morning. Thank you all for being here. And again, thank you to everybody that supported the pitch. I'm sorry I couldn't have done better for you guys and gone slower and done an even epic job. But it is what it is. Can't move on from there. And, we'll see what Jason thinks over the next couple of weeks, if they get back to me or if they don't. Regardless, we're going to keep building and keep trying to chase this dream. Sometimes you get punched in the face and you got to wake up the next morning and get ready to get punched again. Because when you're trying to build anything, when you're trying to put anything out in the world, you get punched really badly and you get through the punches. And eventually you get punched and it doesn't even hurt anymore. So that's it. Keep getting punched and keep going. Thank you, everybody. I will see you tomorrow. Bye-bye.